Good morning and a very happy new year to everyone listening. Welcome back to Almus Market Mornings. There's lots to cover, starting with the big development on India's trade deal being reported in the press. A possible reduction in tariff rate could be agreed upon, bringing the rate lower to 15% from 50% currently. There has been no confirmation officially on this, but it's a rumor, at least the equities in the offshore trade seem to be believing. There is the geopolitical chessboard, which is giving the risk assets a jitter. US considering curbs on software exports to China ahead of their negotiations. US has also put sanctions on Russia's biggest oil producing companies to put pressure on President Putin to end the war. And lastly, which I'm sure all of us want to know, what's going on with the prices of precious metals, because that has tanked significantly this week. Uh, Good morning, JK. Lots happening around the world. For domestic markets, it seems to start with a positive sentiment on the trade deal. What do you think?
Good morning, Swaraj. Yes, perhaps that was one of the best celebration that you could probably get in Diwali. However, the announcement says, or rather, not the announcement, it's actually a media report that says a tariff would fall to as much as, as low as 15 to 16%. Now, that's a big news because not long ago or till now, we have been assuming India will have to work with 50% tariff, and 15 is a kind of base level of tariff that US has imposed on most other countries. And this will be a big relief, no doubt about that, if it is become a final deal. Yes, it's a big relief to the markets, both stock and the currency. Stocks have already seen a massive rally in the offshore market, hitting a new all-time high for the Nifty. Of course, we will wait and see how the domestic market reacts to it. However, I would like to wait for the final detailed agreement as and when it is signed off. There are reports also that there will be a meeting between President Trump and our own Prime Minister on the sidelines of the ASEAN meet that is scheduled in Malaysia this week. So that's something that we'll wait for the official announcement. Implications on some sectors of the economy due to stoppage of Russian oil import and also importing of some agricultural produce need to be assessed both from economic and political angle. And as far as the markets are concerned, whether the development leads to re-rating of Indian stocks, which have been falling, quite a bit due to, concerns of high valuations. And that will decide whether we see renewed inflows from the FIS, because that has been holding down the rupee for one of the reasons holding down the rupee for quite some time. We have so far seen mixed corporate earnings for Q2. There are also increasing indications from analysts and global institutions that a major global stock market sell-off or a disorderly correction is on the cards, and that could also keep the rally in the Indian stocks in check. Is, as I said, it's going to be a relief rally, but interestingly, rupee has mostly traded, even in offshore, mostly traded within the range that we have seen in the past few days. It's not broken even 80, 87, 60. And in the meantime, we have seen some renewed strength in the dollar as well. So the dollar rupee has not really exhibited any exuberance in this regard. Another point to note as far as the rupee is concerned is that if there is a strengthening trend beyond 87.50 and all that, and if the dollar index remains firm, we might not be surprised to see RBI from the buying side to replenish the reserves that it had spent to defend the rupee, earlier at 88.80. So all in all, I think a cautious, celebration is, on the cards, no doubt. But rupee will be still on a slightly, subdued gain for the rupee. We'll watch, at 88 levels whether there is a renewed, defense or rather selling from PSU banks that was seen in the past few days. I am still thinking that 87.50, 88 should contain the rupee at least for the next few sessions, and we will wait for a further official confirmation on this. Yes, apart from that, it's been quite a bit that's happening in the global market. So one, of course, is the big correction in gold and silver. The parabolic moves always result in disorderly correction as well, or retracement, and that's what we have seen in both gold and silver. Gold that was up 13% in this month has retraced almost 9%. Silver, which was up 15%, has retraced almost the entire move. So that is a kind of two-way move that we have seen. And now, of course, we have psychological support for gold at 4,000, and silver perhaps at 45 is going to attract some buying from the market. But of course, if we do see a relief in the geopolitics or even the tariff issues, as also accompanied by a dollar strength, then we could see some deeper correction in gold. And I personally think that 3,800 could be a major support for gold. Although our call for, coming up to 4020 in our previous update has already been met. And as you said, the geopolitics is not ending. We have had, new curbs on US exports to China, irrespective of where it goes to them. Wherever US components are used, that is being curbed to, as a shipment to China. And this is in retaliation to what China has imposed as a curb against their own exports to the US. And of course, this is also happening even as market, or rather, the news reports indicate that Trump and Xi will be meeting in South Korea this week. So hopefully for markets, they come to some sort of a understanding, and the trade tariff, or rather the trade issues are resolved. Staying with the geopolitics, we also had US hit Russia's major oil companies with the sanctions, and as a sort of a move to pressurize Russia to stop the war. This actually has happened one day after plans for summit between US President Trump and Vladimir Putin, but that meeting probably is not going to happen. So that's not giving any sort of a relief to the market. And at the same time, we also had news, that everything is not peaceful in Gaza still. And there were some reports which said that there could be US and US allies could be ready to deploy military forces in Gaza as well. This was some report that came 2 days back. But all in all, I think the geopolitical situation and the tariff situations are not really easing. That keeps the market somewhat in check, and even that keeps the dollar also bit, as well as the stock markets, which have been somewhat defensive yesterday as well. And we also had other reasons for dollar to kind of gain overnight. UK CPI number came lower than expected, both on the headline and the core. See, the UK Central Bank officials had been kind of indicating a hawkish stance, but I think this data has actually put them on course for a rate cut in on November 5th. So that's something that the market would be looking forward to, and compound as moderately weakened. Bigger development has been in Japan, where once again, and in fact, it has become a reality that Takaichi is the new lady PM of Japan. Her re-election or reiteration that she will be she is the PM has led to yen weakening once again above 152. Japanese stock markets have rallied. Of course, today we are seeing some sort of a correction. It's also reported that she is likely to announce a huge economic stimulus package exceeding last year's, $92 billion of a package, and possibly this is likely to keep the yen on the weaker side, and also the stock markets in Japan also buoyant. However, she's also kind of left it to Bank of Japan to decide the monetary policy course. Right now, market is discounting 75% of a chance of a rate cut in UK and 25% chance of a rate hike in Japan. That's how it seems. And despite the shutdown, the Bureau of Labor Statistics is likely to announce the CPI number for September as far as the US is concerned, where that's a very crucial number for Fed to analyze when they meet next week for their policy decision. CPI numbers, as indicated, is mostly on unchanged, except for the headline CPI number, which comes to 3.1% versus 2.9% on the US CPI. So overall, dollar still maintaining that strength, and the last version of dollar's weakness, that was a gold which was rallying as a indication of dollar sell-off, is also correcting. So overall, we are seeing some environment of dollar strength, both based on the news as well as on technicals, and this could continue for some more time. And as far as the euro is concerned, ECB's next meeting probably is not going to see any change. However, there is an expectation that ECB may also cut rates in when they meet in December. UK likely to cut as well. So these things might see the dollar index, according to me, move above 100 or 100.5 as well in the rest of this quarter. And the oil price, of course, has reversed strongly from below 60 levels in the Brent, and the latest geopolitical development of sanctions on the Russian companies, and kind of unsettled situation in Gaza is also leading to some sort of a bid for the oil. So all eyes on the Indian market today, no doubt. Swaraj, I think after Diwali, are people probably going to celebrate, their portfolios swell in the coming days. Hopefully, that will be sustained as well. Thank you.
Thank you, JK. And for sure, I think people are starting the new year with a renewed optimism, especially after the news we have gotten in the past 2 days with the India tariff deal, possible India tariff deal. This is just a press release which has gone sort of viral. No official confirmation as of now, but yeah, that's kept the markets buoyant. One more point I would like to touch upon is that Japan has voted its first woman prime minister, also known as the Iron Lady, Sanai Takaichi, a heavy metal rock fan. She is already announced a few measures to support the economy. US has hit Russia's major oil companies with sanctions. It's also sort of announcing some curbs on China in retaliation to the Chinese rare earth export restrictions. Trump and Xi are set to meet in South Korea this week, and Trump and Modi are set to meet in the sidelines of Asian meet in Malaysia this week. So important things ahead. US CPI will also be announced despite the shutdown. That's something to watch out for. Overall, dollar has maintained its strength. Precious metals are under pressure, and other central banks like the ECB and the BOE look likely to cut rates further. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.